All right, I want to go to Brian Wesbury right now and Carol Roth, two very savvy reads of this market to interpret obviously the Amazon phenomenon and generally this market phenomenon that knows no bounds. You know, Carol, I'm looking at this and certainly seeing Amazon flirting with $1,000 a share. Certainly looking at the NASDAQ, S&P, the Dow now very close to records itself. What is driving this, do you think?
So what is basically driving this, Neil, is that most investors feel like we are in something called the Goldilocks economy. It is just right. We have a period of hopefully accelerating growth coupled with low inflation. And so the optimism that growth is going to continue coupled with that low inflation is making investors pay attention to economics over politics. That being said, if at some point politics come to bear and we don't get some sort of tax reform, that could end up decreasing optimism and unfurling this whole thing for investors. But for the time, we're like Goldilocks, and we are just right.
You know, Brian, another view on this thing, like waiting for tax cuts that they're sure will come, is this notion that maybe if the tax cuts never come, the markets will be fine. They'll get steady and slow growth, which isn't gangbusters, but limits what the Federal Reserve can do in regard to hiking interest rates. And that this rally might not peter out, that's such a conventional view that it might be proven wrong. What do you think?
Yeah, well, I'm way closer to that view than the one Carol expressed. You know, if you look back over the last 8 years, what's driven this market is profits. And at the Amazon store, it's a great story. I guess you could argue that the Amazon retail store is less productive than its website. The key of technology is that it boosts productivity, but productivity has been booming in the private sector. If you look at manufacturing, if you look at online activity, if you look at our phones, the cloud, healthcare and the genome, fracking, productivity is booming, and the way you can tell that is profits are up. In the first quarter, we're almost done with the reporting season. S&P 500 profits are up 14.1% over last year. That's a boom in profits, and that's what drives stock prices. So I do believe that tax cuts and regulatory reform and spending cuts, a smaller government fighting that battle, will help the market and growth in the future. But we don't need it. If you look back at the last 8 years, it's profits that drive the markets, and profits are growing because productivity is growing.
You know, even outside events for the time being, Carol, like the terror attack in England and the ties to ISIS and what have you, and ongoing concerns about repeat terror acts, don't dissuade the investment community. Some have said that it's because these attacks of late, and I'd be curious, Carol, your thoughts on this, have not targeted financial centers. What do you think?
I think that that's right, and I think that the investors have had an incredible ability to digest all of these geopolitical issues going on because they are not having a direct effect on those profits and on the business optimism that Brian was referencing. So I think as long as companies are willing to continue to make capital investments and to hire more people so that we do see some growth and that we do have wage growth and all the things that continue to boost the economy, we will be in good shape. But as those things start to have any sort of effect on that business optimism and make businesses tighten up on making those investments, that's where we really would need to worry.
Brian, would you buy this market at these levels right now?
Absolutely. I think the stock market in general is about 20% undervalued, and I get it. There's all kinds of people who think I'm crazy, but if you look at current levels of corporate profits versus historical stock prices and profits in the past, this market is still undervalued. Profits are going to grow 10+% this year. Looks like 10% growth next year.
We got to continue that discussion, young man. All right, Brian and Carol, I want to thank you both.